Good afternoon from Nairobi, everyone. Welcome to our EGM Securities update. I got Kevin back in the house. Kevin, we got lots of things to talk about.
Yes, a busy day.
The dollar sort of coming off the boil a little bit.
Yep, across the board.
Across the board. You were going to kick off with
Turkish lira.
Turkish lira.
That was just.
I was wondering yesterday, I was watching the news, and before the interest rate announcement came out, Erdogan was bashing interest rates and saying it's a weapon, and then of course we got this big interest rate rise from the central bank.
Yep.
So did they catch the shorts on purpose, do you think?
I think there was definitely a play on that because most of the analysts and economists were pricing in a 425 basis point hike. And we came up with a lot higher than that, 625. Couple of things. The important thing about the Turkish lira is it's a pointer for EM marketplace. Yes. So the rand, Argentinian peso had all
they all followed.
They all followed on
so
that.
It was like a positive contagion.
Correct.
Yes.
And I think that has also rolled over into that. Of course, the concerns is 24% rate enough?
Yes.
There's a lot of questions around that.
It's an incredible question when you think, for real businesses, when you get a 625, how do you cope with that?
And then how do you adjust your cash flows? How do you adjust? Because if you can see, we were as high as 684.
Yes, we were over 7 at
one time. We were over 7 at one time. I had called that a while back, but we've seen a lot of pairing gains. There's a lot of volatility in this level because you can see from 636 down to 612.
Yes.
EM concerns need to also have two factors, and we'll talk about that a bit later, but definitely you need to have a look at oil as well, because anything to do with oil will affect EM a lot higher than developed markets.
Something like the India rupee, right?
So something like
getting
the Indian
it because
rupee,
of the high price of
because
oil.
of that as well.
Yeah. So here, what do you think, Kevin? I mean, people can trade this. Would you be sidelined now?
I would stand on the side right now. I would stand
on
on the side. I'll tell you why. Because if you can see here, this is a very critical level. Since slightly over a month ago, a month ago, you've got a very critical level here.
Yes.
I think the Turkish central bank would also do some more tightening policy. That's the message they passed. I expect them to reduce the number of overnight swaps, offshore swaps.
So what constrict your ability?
Because they need to bring this currency back. The immediate point is you must service the currency and then start recovering on the interest rate. So the currency is very critical. So right now, I would stand aside. There's probably some more pull down a bit, but I would watch it for now. The euro.
And we had the press conference yesterday. We had a no change decision.
We had no change decision. Outlook for inflation still remain the same. QE might slow down a little bit. So I think on the euro side, what people need to start looking at is exogenous factors such as the Italian banking crisis. Just to have a look on that, I think Europe is now primarily being driven by Brexit discussions that are coming out, and you can also see that Sterling has raised. Man, that's a very good trade. We ran a dummy trade we got in at about 130. Our target
actually, when we were lower down, you were telling me that
this has legs. This has legs. So nice tidy $700 profit this morning, which is not bad to close the weekend.
No, don't spend it all at once.
Try not to. I think the biggest concern you have to look at on the euro on the cable is, of course, whether there will be anything coming out that's negative of Brexit. I think the shorts have really been squeezed here, so expect to see a bit of a paring down. 131.20 is a very aggressive move in 2 days. It's the highest you have in about 5 weeks, 5 or 6 weeks level. So it's actually a very important point. If I just change this diagram into a week, so you look at it longer, out to 2013, it's a very interesting level. If you look at these resistance levels.
Yes. So you're saying if it bursts through here, it could go quite
aggressive.
Wow.
There's something here on the cable. I think this is something we need to watch.
And politically, it seems to me that the Europeans have made a decision to try and assist Theresa May because they don't want Boris Johnson
you
or,
don't want, no,
or
you
that
don't
group
want,
to
yes,
deal with.
yes.
So I see,
and
when
it's
I listen to the
contagion,
language,
you know,
yes.
it's contagion for Europe because I don't see how Europe can be inoculated or insulated from a poor Great Britain. I don't see how it's going to work.
So you're telling us to watch out. If
This
we
is
get a little
something
bit
that,
higher,
yeah,
we
this
could
is
have
something.
quite
This is something that we could see a breakout. I think it's something that we just need to look at it more critically. I'll spend some time looking at the charts and seeing what the charts are showing. But I thought that this is a very critical level. We've seen breakouts in 2017, same time last year, breakouts. We could see another breakout. And you know, third quarter volatility in markets is very high. So it's something that anybody who is looking to do holidays in the UK or university education is something that you need to be careful about. Great.
Thank you very much,
Thank
Kevin.
you very much.
Thank you.
Enjoy your weekend.
You too.